Hi class, today we're going to be looking at the second video for ProConnect, Chapter 6. All right, I'm sharing my screen with you with ProConnect. And what you should be seeing are the list of stock transactions that we've done all throughout this semester. But I want you to pay particular attention to the last two transactions that I've entered here for you. They are the Beethma stock transactions. You'll remember that in this chapter, the person who owned these stock transactions sold half of their shares to a sister and half to an uncle. The shares that were sold to a sister are considered to be a related party transaction, and the loss from the sale of these shares of stock is disallowed for related party transactions. So I had to break the transactions down in two parts because one of these transactions is a related party transaction where the stock was sold to the sister. The other half of the stock was sold to an uncle, and the uncle is a non-related party transaction. So the stock that was sold to the sister is a related party transaction. And so I want to show you how to enter that in the information on ProConnect. First of all, if you're not already there, you will want to click on income on the left side of your screen on the menu. Click on income and then click on dispositions where it says Schedule D, and then click on Schedule D. And what will come up is a place where you need to enter information about the stock that you've sold. So we're going to sell 500 shares to the sister. So the quantity should show 500. For a description of property, you're going to record this as Beethmont stock. It's a non-deductible loss, or this is the related party transaction that I talked to you about just a few minutes ago. In your instructions, they give you the date that you acquired the stock and the date that the stock was sold, as well as they tell you that the selling price per share of stock is $5. So if you multiply $5 times 500 shares that you sold, that means you have a sales price of $2,500. In the information to the problem, they also told you that all of the shares, the 1,000 shares, had a cost of $30,000. Since we're selling half of the shares, the cost of half of the shares would be $15,000. Because this we've held this stock for a while, or this person has held the stock for a while, it is a long-term transaction. So you'll scroll down to where it says short-term or long-term and put a 2 in here for long-term. Also, you'll want to click on joint because this is a joint return. And if you'll scroll on down to where it says related party loss, make sure you check this for the sister's transaction. When you check this, it will disallow the loss for you on your Schedule D. So make sure this is selected. And that's all you have to do when you're recording this sale of the Beethma stock. I'm going to go back to my second journal entry that I've already recorded. And this journal entry, I'm going to look at the details for it. This is where you would originally record it, is in the information for Schedule D. You're going to write down 500 shares as your quantity. It's Beethmoth Air. This time, this is the stock that was sold to the uncle, so it's not a related party transaction. The same date it was acquired and the same date it was sold for. They sold these shares for $5 each. 5 times 500 is $2,500 as the sales price. The cost is $15,000, which is half of $30,000. You'll select 2 because this is going to be a long-term loss. You'll select joint because this is a joint return, but do not select the related party loss on this transaction, because when you sell the stock to the uncle, it's not considered to be a related party transaction. And that's how you enter the sale of this stock. And so this is where we got into trouble the last time that we met. And what I tried to do is I tried to click on this preview forms here. So I'm going to do that again. And I know that it's not going to show up, but I'm going to try to do a new share for you. So let's see if I can get it to work this time. I'm clicking on preview forms. I'm going to wait till it loads up. I can see on my screen that I've got the forms loaded. I'm going to stop sharing this, or actually I'm going to do a new share and see if I can find those forms. Now you should be able to see the forms that were left off of the original video. I want you to go to form 8949, and I'm going to scroll through this. This transaction here was from another chapter, as were these transactions too, if you just scroll on down. The first transaction here is from another chapter. Here's where your month stock will be recorded. You can see the date acquired, the date it was sold, and this transaction is a related party transaction. So it should show 0 here in the H column. There will be no gain or loss that is recognized because it's a related party transaction. You will, however, have to have an amount of $12,500, which is the difference between the selling price and the cost, as the amount of the adjustment. And so that has to go in the G. So make sure it's in G, and make sure that this is showing an L, meaning that the loss was disallowed. The second transaction is for the uncle's shares. Notice what happens here. They get to take the loss. So the loss is combined with the gain from the sale of the residence from a previous chapter. And at the bottom of this form, on line 2, they have the totals here. So this 2,700 is going to feed into, and all this transaction here is going to feed into your Schedule D. So I'm going to click on Schedule D to show you where it feeds in. It comes in right here. And then the rest of this was from the previous transactions. So on Schedule D, line 16, you should have 4310. This 4310 is going to show up on your 1040 form. So I'm going to click on my 1040 form. I'm going to show you where the 4310 goes. It goes right here on line 6. And so that was something that was new for this particular chapter. Also, something that was new for this chapter is your other income from Schedule 1, line 9. So I'm going to go to Schedule 1, and I'm going to go to line 9, and you can see it's $36,033. And it came from the business income. which changed in this particular problem, because you remember they had more income than they thought they did. And then the rental real estate stayed the same as it has in the past. And the farm income, or excuse me, line 7 is staying the same too. So it would change line 9, but the rest of these stayed the same. So this was different on this particular form. And also at the bottom part of this form, this 27,446 is also going to change. You'll have 1446 now as the deductible part of the self-employment tax, because the amount of your business income changed to an income, and you have to pay taxes on that. So that means that there's going to be a Schedule SE that will be new for you. And that Schedule SE is also on this list down here. If you click on Schedule SE, you can see this is Schedule SE. This is the amount that comes from the net profit or loss from Schedule C. That changed, remember, because you changed the income. And then this would be the same as this. And then you're going to multiply this line by 92.35% or 92.35%. And that gives you this. And then it says if the amount on line 4 is 132.9 or less, multiply line 4 by 15.3%. So line 4 of 18,896 times 0.15% gives you 2834. So let's see what here. If the self-employment tax, if the amount on line 4 this is the amount on line 4, which is 18,896. If we multiply that by 15.153, that'll give you 2891, and that's how they get this. 2891 for line 5. And then you go on to line 6, and half of line 5 is 1446, and that 1446 goes on Schedule 1. That's where that came from. So because we had a change in our Schedule C to a net income, we did have some self-employment taxes that we had to pay, or the amount that we owed. Then we multiply that by 50%, and that's what we include on Schedule 1. So on Schedule 1, this is where we're getting that 50% of the net amount of self-employment tax that was owed. The rest of these are the same as for previous chapters, so this changed right here. And this, of course, would end up on the 1040 form, line 8A. So if we go back to 1040 and we look at line 8A, that's where they're getting this from. Then you also had a Schedule 2 that had to be reported, which was self-employment tax again. So I showed you that self-employment tax schedule that we had here, but that also needs to be reported on Schedule 2. So ProConnect would generate a Schedule 2, and that comes off of the self-employment tax form, which is right here. So if you want to click on that again, that's where this number comes from. So you had to do a Schedule 2, and you had to do itemized deductions, which was Schedule A, and the amount would have changed because nothing really changed as far as the itemized deductions, but the amount on the 1040 changed because you had those other changes in income from Schedule C, and other items that affected the 1040. So this will change in this chapter. So if this changes, it's going to make this change, and then this will change. And then, of course, the total down here would change. These are itemized deductions that will end up on the 1040 form. So your itemized deductions go in right here. And because we had a business income this time, we now have a qualified business income deduction. And so that is going to be calculated for you. And I believe that it's calculated for you in ProConnect. So I don't remember you having to do that. I'm checking through my notes here though. Yes, you did. You had to do Form 8995. And that 8995 would be automatically generated for you. And it would come from the information from the trade or business, which was Toad Pass Auto Parts. And the amount of the qualified business income or loss was $19,015. And when you fill out this form, here's where you get the 3803, which is line 4 multiplied by 20%. So 19,015 times 20% gives you this. You didn't have any of these things that happened, so they just brought this down. And then they had the taxable income before the qualified business income deduction was 55,301. And then you had a net capital gains that would come from your qualified dividends, that was 1,031, plus your long-term capital gains. So this part for 5,341, that's how you would get that. Also, for line 11 here, this 55,301, they get that by taking the adjusted gross income and subtracting out the itemized deductions. So your adjusted gross income off of your 1040 form is 82,132. If you subtracted your itemized deductions, that would give you 11, which is 55,301. That's how they get that. Okay, and if you don't know how to find the 19,015, what you're going to do is you're going to take your Schedule C net income, which was 20,461, and you're going to subtract out half of your self-employment tax, which was 1446. That's how they get this 19,015. All right, and then enter the lesser of line 10 or 14. This is 10, this is 14, this is the lesser. So that's how they're getting the 3803. That goes back to the 1040 form. So I clicked on the 1040 form. It goes right in here. All right, and then you're going to add lines 9 and 10, and that'll give you 11A. And then you're going to subtract 11A from 8B. So subtract 30,000 from 82,132, and that'll give you 51,498. Now, there should be a capital gains worksheet that this produces for you, and that worksheet is right down here. If you click on it, you might have to scroll through till you find the capital gain worksheet. This is just showing you where they're getting the information from. And this is the tax worksheet that it does for you. And the amount of tax that they come up with is 5,153. And this will show up on your 1040 form right here. And it goes down to line 12B. And then there was a child tax credit because this person had a child that they could take. And then you would subtract the 500 from this to give you line 14. And then other taxes, including self-employment tax from Schedule 2, line 10. You go back to Schedule 2, line 10, it's $28.91. So back to the 1040, $28.91 goes here. And then line 16 is adding 14 and 15 together to get that. This was the federal income tax withheld. If you did everything properly in your previous chapters, you would have already figured that. And then the difference between these two is $155, which is the amount that you owe, or that he owes to the government. And that's what happened on these particular returns. So I'm going to stop sharing this with you, and we'll see you again next time. Hopefully you can see everything this time. Bye-bye.